If you've never been to my YouTube channel before, I'm Kerry. I'm a retired financial advisor. I've been in this business many, many years, and I am of the belief that as a result of artificial intelligence and the coming machine learning, that I'm going to make more money in the next 5 years investing in the stock market than I have in the preceding 50. And in order to do that, I need to become a stock analyst rather than a financial advisor. And that's what I'm schooling myself on. And what I want to do in this video is take you through the process I go through every morning to assist me in being a better stock analyst. And I start with this website. It's called macrotrends.net, and I come to its stock screener position, and then I sort the stocks basically that I only want to buy stocks that are in the U.S. I want them to have a market cap of over 250 million. So I want them to be established. I don't want them to be a penny stock. I want them to show profit. So I put in this, that they have a PE ratio of 0.1. As you can see, I can make it anything I want. But that says they're profitable. So I'm not going to get any stocks that are losing money and trying to establish themselves in their position. Then I come over here and I click on this, and this says 1 year. First of all, I do short-term performance, and then I do 1 year. I click on it the first time, and it shows me the worst performing stocks, and then it shows me the best performing stocks. Again, I am looking for stocks that are going to participate in the build out, at least for this portfolio. The portfolio I'm adding to, it's my Bus 13 portfolio. I'm looking for stocks that are building out the internet to handle this increased capacity that data centers are going to have to deal with as a result of the upgrading of websites and through artificial intelligence and machine learning. If you don't understand that, you need to go back to some of my other videos. But this is how I pick stocks. And so what it tells me in year to date, the best performing stock out there under the parameters I've set forth is a super micro computer. I already own that. That's in my Bus 13 portfolio. The second one at 466 is Opera. Opera is a browser, a web browser that is out of the Netherlands, and basically it's a paid-for browser. They don't have access to Google or Bing or something like that, and so they're growing quite rapidly, but that doesn't fit into the category I want. The third is AEHR Test Systems at 447. I also own that. Liberty, this is TripAdvisor, and this will be a stock I will look at because I think they're going to be a big player in delivering AI, but this portfolio has nothing to do with that. This is a building company. They build hospitals, university buildings. They're also getting into the building of web centers, and they're trying to get off the ground with a prefabricated web center. And this is in test. And that's the stock I want to look at today to take you through the process that I go through for picking stocks that are going to make me a billionaire. So they're up 273. I then come across year to date 127. 6 months, 105, 3 months, 24, 1 month down 6, and 1 week down 9. Why am I, and this is why I picked this stock. It's giving you an opportunity to buy in. Okay, and we'll go through the stock, and I'll show you why I think that's important. Then the next thing I do is park right there, and that gives me a view of what they've done over the last year. That looks like a stock that has been recognized, is growing, has momentum, and will probably continue to climb. It then gives me a brief description. Intest Corporation is an independent designer, manufacturer, and marketer of ATE interface solutions and temperature management products, which are used in the semiconductor manufacturing to transform final testing into integrated circuits circuits and wafers. This is where I want to be. This is somebody who's going to Amazon Web Services and saying, hey, I recognize you're building a new data center to take advantage of or to handle the capacity you're anticipating from artificial intelligence and machine learning. And you're probably buying Supermacro's computers, and built inside those computers are in-test products, okay? So this is all part of the ecosystem that I want to be a part of. So then what do? I go to Seeking Alpha. Seeking Alpha is my go-to place, and I go to it and I start at the summary. And again, it confirms that in 1 year they're up 289% year to date, up 120, and shows that same chart. So then what I do is my eyes come over here and I see their rating system, that Wall Street has them a strong buy, their quant system has them a strong buy, and the Seeking Alpha authors have them as a hold. I then come down here and I say, okay, let's see how they're doing to the other companies that they compete with. In overall ranking, they're number 112 out of 4680, number 20 out of their sector, and number 3 out of their industry. Though that's where I want to go next. I want to see who else is in that industry and how do they compare. And here you can see they are number 1. This is a stock I own. ACLS is number 1, a stock I own. PLAT is number 2, a stock I own. And Intest is stock number 3, a stock I own. And I own AEHR, because all of these are involved in bringing these data centers up to speed. So I'm very high on it. I see they also have high ratings by Wall Street. Then what I want to do is I want to go back to the summary page, and I want to look at their financials. So I click on financials. Okay, and I look first thing at revenues. If a company is going to succeed, it has to have, that chart has to be in an upward pattern. If it's, as you see in 19 and 20, they took a step down, but have recovered very nicely in 21 and 22. And of course they would, because they're helping build the new new data centers. Okay, then I want to say, okay, it's not only enough that you're building your revenues. How are you doing relative to income? And so here I look at operating income, and I can see that again they had a bad year in 19 and 20, but their income has jumped substantially, and that gives me a reason to move on and say, okay, now I want to learn more about it. Then I want to look at revenue per share, a growing number, and then I want to look at earnings per share, because this is the ultimate decider what a stock is going to do. Is it growing, and is it growing to give more earnings per share of stock? So I'm seeing positive figures there. Then what I want to do is I want to go to earnings, and I want to go to earnings estimates, because what I'm looking here, okay, I can see what you've done in the last 3 years, and it looks like you're doing a good job, but what are you doing in the future? And so this is their estimated earnings per share. Where does this come from? This comes from analysts, and it comes from the quarterly calls that their executives put out, and they give projections of what their earnings are. So here we see in 2023 over 2022, they're expecting 11% increase, 8% increase in 2024, a 2% increase in 2025, 8 and 10. So I see a earnings per share going up. So meaning they're becoming a more profitable company. What does that build on? That is built on increasing revenues. So I see the revenues growing 10, 9, 4, 7, 7. So the revenues are growing, the earnings are growing, so we have a company that is moving in the right direction. Okay, so let's go back to the summary. let's go down here and look at what is their profitability. Well, they have a gross margin of 46%. So that means that the product that they manufacture goes out the door with a 40% markup, but then they have to pay their salesmen. They have to build the rest of the costs into it, and they have a 8.5%. That doesn't strike me as extremely good, but that's what we're dealing with. And we make a judgment based on that. Again, we have a market cap of 274,000. Then our 274 million. We have a PE ratio of 21. So, and then we have a forward-looking PE ratio of 1. What is that telling us? Well, it's telling us that their profits are going to go up substantially because of the anticipated profits. If the price stayed the same, the PE ratio would be 1 rather than 21. That's telling me we've got a growth stock. Now what I need to do is analyze all this information and come to a conclusion. To do that, I go to my Excel spreadsheet. Here I have created a program. I guess you might call it a algorithm that I analyze the stock and all the information that I gathered. So here is the revenue that we found. Much of this is fed because I found formulas that reads Seeking Alpha or Yahoo Finance's records and plugs these numbers in for me. Okay, that's their revenue. That's their income. We're going back to 2019, and you can see their income was at 202.5 million, went down to very little, went to 7, had a growth, went to 8, went to 10, and then we start projecting from analysts what it's going from there. So that's our income. This is our earnings per share that are growing at these rates. And what I then do is take averages and create a score, okay? So I give them a 23% average growth on their revenues over the period that we have here of 23%. And I'm looking for stocks that are growing their revenues in excess of 23%. Then we have a growth in average growth in income, and that's an astronomical number, but you can see we start at 2.5 million and we go to 10 million and we're projecting up to 16 million. So that gives us this tells me this is a company that is manufacturing money. Okay, then we come down, and this is the growth of their earnings per share. Started at 22 cents, is now at $1.10, and is projected to go to $1.47. And so that gives that an average score of 261. This is a score on their growth. This should be a negative number. And I can do that by adjusting this right here. And that changes that number. And so there's some work that I have to, this is not all just cut and dry. And then this is the growth of their stock price. Started in 2019 at $5.60. It's up to 24. And so that's growing at a rate of about 45%, with the big growth of it happening in 2023 when their price went from $10 to $24. Then what I do is I use these numbers, particularly the growth in earnings per share, to give me an idea. What is the price of this stock likely to be in 2024? And it is likely to be 26, 27, 29, 32. So that gives me an overall growth in price of 45. Now, this is an interesting number. This is a number that I found that Yahoo puts out, and it gives me what they estimate this stock is going to grow at, the rate of its growth over the coming 5 years per year. So Yahoo is telling me this stock should grow at a rate of 15% per year every year from 2024 through 2027. Okay? So that gives me a score. I then take all of these and I average them. And of course, this is being thrown way off by that number. And so now I've got to make a decision from what I've learned, from what I've seen it do in the short term, from the first site I took you to, from what I've learned by reading things on Seeking Alpha, I want to own this stock because I believe the internet has to be rebuilt. I use this from an analysis. What if we invented a vehicle that was astronomical? It would clean the air, it would stop global warming, it'd make everybody wealthy, but we have to rebuild all of the streets, the roads, the highways, the traffic lights, the lighting on the street, the signs, everything has to be rebuilt. That's what I believe is going on in the internet. We are creating a capacity need that the current data centers cannot keep up with. So they've got to be upgraded. And InTest is going to play a big part of that. And what I believe is most of the world doesn't know this. You aren't hearing this talked about on CNBC or Fox Business or Yahoo or any of them. They aren't saying that the internet is obsolete. And the websites you're going to go to in the future are going to be interactive. And that's going to take so much computing power that they're not going to be able to keep up with it. So that's what I do. That's how I go through and create my portfolio. This is where I keep track of the Bus 13, and here is INTT that is already in there. And you can see that since 2019, it has had a average annual growth rate of 35%, which works out to be a little above the overall performance of the overall portfolio. And you can see here that includes Amazon, Apple, Microsoft, Amazon, all of these companies. Then what I do is keep them on this, and I watch them on a daily basis. So you can see this is telling me what each one of these stocks are doing today, what they've done in the past week, what they've done in the past month, the past year, and year to date. And this is a chart that keeps it. This is going to be a part of our website. It will be embedded. So these numbers change as the prices change on the exchange on a daily basis. So that's what Best of Us Investors and Kerry Grinkmeyer is all about. I don't want to be pumping stocks. I want to be analyzing stocks, and I want to share that with you. If you went out and bought this on an individual basis, I have no idea what you would pay for it. I spend about 6 hours a day analyzing stocks and coming up, number one, for my own benefit. But I'm willing to share it with you, and I'm willing to make videos about it. So if this sounds like something that could bring value to you and could enrich your life and your family's lives, well, then subscribe to the Patreon and just kind of get on the bus and then meet with us every Friday afternoon. We'll talk more about it. And then you can be with me as I build bus number 12, which is, as I said, going to be all about those companies who are going to deliver the new level of information that the internet is going to provide us in the future. It's going to be bigger than the internet itself as far as how it's going to change our world. It's going to change every aspect of our lives, and you need to get on the bus.